Good morning, Paul Georgie from Allendale. It's April 17th, Tuesday morning, and grain markets are slightly lower or mixed here this morning. Corn a little lower in the nearby, steady in the deferreds. Beans are higher, and we're still waiting for the USDA to give us the weekly crop progress report and crop conditions report. They had a problem with their computers yesterday, and they will be releasing those numbers this afternoon at 3 o'clock. So they're looking for some good plantings. Trade estimates are anywhere from 17 to 25% plantings on corn. That would be a record. And compared to record years of 2004 and 2010, we have to take both years put together in order to make the line on the record plantings progress. But both of those years we had record production. So that's the analysis trade's looking at right now. And with the rains that we're seeing throughout the Midwest here this past weekend, and more rain coming this coming weekend or early next week, the trade is believing the old adage, rain makes grain, and that's what's putting the pressure on the corn prices here in the short term. We've also seen some selling pressure throughout the commodity complex yesterday, and that has been prompted by Spain's concern over their cost of money. They did have an auction overnight, increasing their cost of money and the rate that they have to pay for borrowing. That certainly is negative, and creating a possible problem in Spain like we have seen in Greece. So that is the Spain situation is building. Also, there's concern that Argentina may actually nationalize or take over the largest oil producing company in Argentina, YPF. It is a subsidiary of a Spanish company called Repol, and that is a concern to Spain. It's also leading some concerns about the financial stability of Argentina. So the world financial crisis again is taking hold, and that is creating reasons why investors are getting out of commodities, reducing position size. We've seen last Friday where the CFTC reported funds liquidating positions in commodities. It appeared like we continued on that pace yesterday. Today, so far, we have consolidated and may get a little bounce as turnaround Tuesday could provide us some support. Another thing on soybeans and why soybean prices are so strong, and expecting better demand here for old crop beans coming out of the U.S. Right now, the values of soybeans in Brazil are 20 cents higher than U.S. soybeans. Compare that to where we were a year ago. At that time, Brazilian soybeans were 43 cents less than the U.S. soybeans. So definite reason why we are seeing some shifting of purchases out of Brazil to the U.S. Main reason for the problem in Brazil is certainly their port situation, where there's as much as 25-day delay in some of the major ports there. There's also talk that some of the optional origin corn that was to be shipped to China, more than likely, is now coming out of South America. That was circulating yesterday and putting some pressure on nearby corn prices. And in the livestock trade, some change there. We did see some pressure in futures yesterday in both cattle and hogs. However, overnight we did get the report on cutout values. Box beef values, choice, for instance, was up $2.75. Select was up $3.16, and we had pork cutout values up 84 cents. So with a reduced production by the packers, we are finally seeing some support come into this meat price that can provide some change in their margins, which right now looks like the the margins are improving. We were yesterday at roughly $80 a head loss. That should improve with these type of improvements in product. Futures continue liquidation there. We're seeing margin liquidation of the longs that's pushing this thing down. We're also seeing some fund liquidation, and where they have gone from a long position in hogs to a short position in hogs, for instance, and just the overall lack of demand from export business because of the strength in the dollar. So those are concerns that we're looking at here in the livestock trade, and some of the issues that we're facing here in the grain trade. Technically, we've got the grain futures sitting on some horizontal support. It's got to be watched very closely. If we take that out, we expect we could see some more follow through to the downside, and possibly some stops being hit at that point. In the livestock, trying to buy livestock right now feels like it's like you're trying to catch a falling knife. Chances are you will get cut if that occurs. So a lot of reasons to stay in touch with Allendale's research. We'll be happy to answer any questions that you might have. Just give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.